Hello everybody, hope you're doing very well and welcome to today's Contenders live stream. It feels good to be back, I'll be honest, it feels really good to be back for today's stream. Obviously after a little breakaway, little holiday, has got me hyped for today's stream. Obviously while I was away there was a request for me to go over my Bollinger Band scalping strategy. So yeah, that's what I'm going to be going over today. So shout out to whoever requested that. I thought it was time as well, so it's going to be good. I'm really looking forward to teaching you all this. Like I wrote in the chat today, I'm going to go through this today, and obviously it's going to take time to, maybe you'll want to watch this back a few times and understand everything 100% and then go out and practice it and give it 1 month. We'll have like a whole room of like 100 of us all trading this same strategy, I believe, and it's gonna be fun. So yeah, I'm really looking forward to doing this lesson today. This is like a strategy, by the way, that I made up. You'll well, I don't believe you'll ever have seen this or someone with a similar strategy online, so it's pretty exciting to share this with you all, to be honest. And yeah, so yeah, that's what I'm going to be going over today, like the way that I sculpt. Well, I do have a few different ways. This is one of the ways. So I'll tell you, in 2018, this is for crypto. I'm on about like stocks. I don't use this, but for crypto in 2018 specifically, this was just the biggest money maker ever. It was just fire. All I would say is it requires a lot of time, and like nowadays I don't really have the time for it, so I don't do it as much, if I'm honest, because it requires a lot of time at a computer. But never mind. This is what is going to be going over today. So I'll be covering Ren chart of the week, which has just hit 2 entries of mine. So this is like a live one, pretty much, Ren chart of the week, and then I'll be going over one of my scalping strategies. I have a few, but probably my favorite one today. And then taking a look at Litecoin and Ethereum and Bitcoin. I will go over those 3 for you all because, yeah, I mean, just look at Bitcoin at the moment. Obviously, it's pretty on fire. Getting a bounce at the moment. I'll remove this short because this was a bit of a joke. Yeah, this obviously we're getting a bounce off of the monthly level at the moment. As you all know, well, if you're in the Champions group, you'll know I entered a long offer this monthly. Okay, and my stop loss is just 1 tick above the wick. Okay, so we'll see how this goes during the duration of the stream, but I am in a long from this monthly. Am I very confident in it? No, not really. Look at this just onslaught. But yeah, I decided to take the long off of this level 1. I'll just explain this before I get into the videos today. But basically what I'm looking at here is, if you just look at the 4-hour RSI, look when the 4-hour was last down. We are currently on 18 RSI. The last time we were this low was the 14th of January. Okay, so this is an extreme level for the RSI, a real extreme low. So one has to imagine with this extreme low RSI, one would expect a bounce. Okay, why am I not overly confident in it? Well, there's not a real great amount of follow through. The volume is really low. So if you look at that volume, what would you say? It's more like a bear flag to head that downwards again. That's why I've obviously got a stop loss on for this video. It's not looking great, if I'm honest, but never mind, we'll see how it plays out. I'm not bothered too much if I lose that trade, but yeah, that's the only trade I'm in at the moment that long. But yes, it's only meant for a little trade. We'll see how it goes by the end of this video. Maybe I'll be stopped out. Maybe it'll run up to 10.3. 10.3 is obviously resistance here, about 10.4, 10.3 resistance now. So we'll see how that goes during the duration of this live stream. But yeah, not overly confident in it anymore, to be honest. But anyway, yeah, so Ren chart of the week. Let me go through this. As you can see here, this was the setup. This was posted 2 days ago now. Since here, we have obviously dropped down through these levels, hit the daily, hit the 618 pretty exactly, which has filled 2 of my positions. Let's load up Ren. This is a pretty exciting one, obviously a pretty much a hype coin. What we can see here is we come out to the daily. Okay, what we can see is pretty nicely we had like a confluence. Okay, so we had the 55 exponential moving average on the daily. We had the daily level itself, which you can see is formed from here. Okay, and we had the 618. Okay, so this for me is a strong confluence. of support. Okay, so for me this is like a strong confluence, you know, three pretty big levels together like this. Yeah, I have one more bid left to be filled, which is below the 6.5. Okay, so it's slightly below the 6.5, and then it will be one bid off of the daily, one bid off of the 618, one bid slightly below the 6.5. So three bids, two are filled. I would like my last bid to be filled, but we'll see how that goes as well. Maybe we can review this at the end of today's live stream. But yeah, I would prefer it to drop down for one more leg. And get my last bid filled here. But this is what I would like to just show you all on Ren. Okay, so I am in a long position. Let me load up the chart from what I was going over. Okay, so this is obviously... this is the position, obviously last entry just below the 6.5, which is also just below this pool of liquidity that's likely going to be sat just below this low. Okay, so yeah, pretty wide stop, obviously down below the 7.6, but as wrote here, okay, I'll you know, you can see here like three ladders, okay, which was the daily to just below the 6.5. Okay, midterm swing trade, you have to remember the target's quite aggressive, you know, quite large, so it's not going to happen overnight. But yeah, basically daily level, golden pocket, 55 EMA. If this support does not hold, okay, I do expect a swift drop down to our next daily, which as you can see is sat all the way at 618 sats. So I would probably close out of this position before it hit my stop loss. If we start closing below this level, I'll cut the trade early, so I will not probably hold it to invalidation. If I'm honest, I'll be pretty swift to cut out of this trade if that does in fact happen. Okay, but obviously take profits. Okay, if we're looking at this, you know, we have to remember that price does very rarely always come up to targets, so obviously taking a fib retracement from the top here down to, let's say we get our bottom entry, then obviously you'd be looking at this 382 here, which I like because it coincides with these two highs, okay, on our obviously our daily chart. So, you know, you're looking at basically 1,000 sats. If I remember correctly, 1,004 sats is a big level. So 1,004 sats, that would be my major take profit if price manages to get there, okay. So yeah, basically hard set stopped below the 786, but as wrote here, as I mentioned earlier, if price starts to be closed below that 6.5, I will close out of it early. I won't hold for that 12% drawdown. It's just I don't think there's any need for me to hold that trade all the way down to invalidation, because I believe this could be a swift drop down. Okay, you can see here you also have somewhat of a daily order block, so you also have this little order block here. Okay, so that's, you know, this is what I'm basing my trade off of. Okay, so you can see this last entry, which is obviously just set slightly below this wick, okay, because one could expect that there's a lot of stops to be placed here, and you know, my preferred scenario would be something like this, okay, swiftly taking that out for a swing failure and like, you know, heading back up again. Well, obviously this is the overall target is weekly, but we'll see how that goes. We obviously have this downward sloping trend line. All I would like to factor in here is just one thing that is giving this a bearish view. Okay, so one factor that is making me somewhat debate my viewpoint here, okay, and that's that. Let's come down to the 4 hour. I was looking at this earlier, yes, and it's this the potential of a WXY correction that's going to bring this down lower, okay, and that's obviously the ABC and the W, ABC and the X, and an ABC coming down for the Y, and that's just a double zigzag correction, okay, clear zigzag here with an extension in the C, and then a nice just ABC in the X, and then hopefully I say possibly another ABC to finish with a for a WXY or just a double zigzag, okay. And if we're looking at this as a 1-to-1 from the W, then we can see target would be somewhat around 801 sats. Okay, so that's a possibility, okay, and if we're looking at that, so let me keep that back on, and if we're looking at this an ABC of this ABC potentially forming here, then we can see the 1-to-1 also is at basically a 1018 sats. So, you know, that's my next confluence zone. But I would prefer to close out early and look at this as a new trade, okay, if price comes down to here, rather than just holding this continuous trade. That would be a new trade that I would take, based off of the confluence that you got at that level. But that's a nice confluence to just be aware of, that's there, and the possibility that we might lose this level to come down and get some more of a stronger correction, okay. Obviously though, as mentioned, if we do lose this level, this wouldn't be one that I have just bids set at. I would want to see some sort of trend reversal. So if price does in fact come down to here, I would not have bids just randomly placed here, or not randomly, I just wouldn't have bids placed there. I would want to see this, okay, I'd want to see the trend change, and that's when I would get involved, okay, not just have bid sets like I did have bid set here. Okay, this is not a level where I would just randomly have bids set. I'd want to be there, actually see the trend change, and then get in, because I think there's a high possibility of coming all the way down to 618 if we start to close below this level, which is obviously about 850. If we start to close below 850, we have that possibility that, as just mentioned, that those one-to-one extensions. But if not, I'd be looking down to 618 before I really got interested in Ren again. So it's kind of like a make or break level for me, depending on how much I trade this going forwards. Really depends on this trade that I am half in, well, 3/4 in right now. So yeah, that's Ren. Pretty exciting trade, I guess. Yeah, got a little bit of follow through. I could have closed out on that original bounce, because what did you have here? You obviously come up straight to the last bit of support, flipping into resistance. Could have closed that out, offered a 618 for a 3.5% gain. That's not too shabby, if we're honest, is it? Look how perfect the bounce is, offered a 618, and that's like a scalp. That is like a scalp's trade in itself. Literally 618 up to, literally you just do this, 618 buy to 618. Where do you close out? The last area of support, and you can see that people done that, and that's a 3.5% gain in what, like 30 minutes. That's really good trade. So I could have done that, but yeah, I'm not doing it, because this for me is not a scalp trade, but it could have been in itself anyway. So I hope that's explained. Yeah, this trade here. Can I cover Elliott Waves soon? Yeah, Elliott Waves is going to be really soon. I want to do parallel channels, fibs, and then Elliott Waves in that order. But yeah, Elliott Waves will be soon. It's like planned. But I want to do it in that order, because it makes more sense. Because to do Elliott Waves correctly, you should actually do channeling, and then to do channeling, you need to do fibs. So it makes sense to cover it in that order. Let me just read. Hey, will this also be live trading? Live trading, no, that's in the Champions live streams, not today. Hey, hello everybody. I would like to know what to look for with a swing failure candlestick and which time frame it works on. I have done a whole video on swing failure patterns, so I'm not going to cover that today. I'd say go back and watch my video on swing failure patterns, because I've done a whole live stream on that. So yeah, that's all I'll say on that. But yeah, that's obviously Bitcoin and I don't know, Bitcoin Ren. Okay, now I want to go over to the main focus of today. Oh yeah, so this was earlier, obviously results of the trade and how I traded it. Price did not hit entry yet when I was making this, so now it's obviously hit entry, and I've just covered what I'm looking for there. So yeah, we'll have to review this next week, really. So yeah, it's going on to my scalping strategy. So what I would say for this is I'd like to go through all the slides. So how many slides? We're going on from 5 slides down to 22. 21. Okay, so bear with me as I go through the next 15 odd slides. Okay, I'd like to go through the next 15 slides and just go through everything that I want to do. I know that there's going to be questions coming in, but I'm going to ignore the questions and take them all at the end. Okay, so that's just something to be aware of. I'm not going to take questions as I'm going through this, just because it'll be it'll be easier for me to just explain everything in one go and then take all questions, and maybe I will cover your questions as I go through the content. Okay, so that's what I plan to do, and then if there is any questions at the end, then just let me know. Okay, and I will obviously cover all those questions. Okay, so with that said, let's begin. So my scalping strategy, okay, I felt like I had to put a name to it, so I've called it the CCS, which stands for Chart Champion Scalping, CCS. This was a strategy that I made myself, so yeah, you'll probably never have seen this taught before. It's based around Bollinger Bands, exponential moving average, Elliott Waves, horizontals, and fibs. Okay, the bulk of it, okay, I'm really aware. Obviously, I didn't come up with the concepts of these things, but then forging them together in the way that I have, I think it's really unique. So yeah, basically, it's a scalping strategy. So if you're a swing trader, it's probably not for you. As I have wrote here, in an average day, I can easily be taking between 50 and 100 trades. So this is really time consuming. Okay, and this is why I don't do it as much anymore, because like last year, I could spend all day just doing this, and like I loved it, but like now I still love it, but I just do not have the time to do it anymore. Like my days are too busy to like trade like I used to be honest. But yeah, it's still nice if you have that time. Okay, but yeah, this is one for if you're looking to get into it or just interested in how I do it, I guess. But yeah, it's on the 3-minute or the 5-minute chart, depending on volatility. If there is extreme volatility, I will use the 5-minute chart. just because the 3-minute chart, you might get a bit too many false signals, okay? And you'll see what I mean in a minute, okay? But essentially, so this is the real base essentials, and the real base essentials are really, really basic. But you know, I add concepts and add more complexity to the real basic strategy. So you can use it on its own, just the real basic. But I would, you know, I would say I never use it on its basic methods, okay? Which is just plain Bollinger Bands and EMAs. That is not really the way that I do it, but you can, okay? So basically what you're looking for is to, I've got slides all prepared, by the way, so this might not make sense on this screenshot possibly, or this slide, but as I go through, I hope by the end of this you'll understand it fully, and then maybe next week we can do some trades together on it, okay? But yeah, basically you're looking for price to close outside of the Bollinger Band, obviously on that 3 or 5 minute time frame, okay? And when it closes, so it's a counter trade trending strategy, okay? So you are trading against the trend. If price is going down, you're looking for longs, and if price is going up, you're looking for shorts. Okay, so you are playing against the trend. So that's a little bit advanced, I would say. Not many people do this, but yeah, it's a counter trend strategy, okay? And likewise, when price closes outside of the Bollinger Bands to the top, I will look for a short and target the 8, 12 and 26 exponential moving averages. This is a script that you've probably all seen before, and this is I've released this script ages ago on TradingView for free. So as with every strategy, there are losses to be had. You know, obviously this is not going to win 100% of the time. That would be crazy to think that it would. Okay, so as wrote here, sometimes it will take several losses in a row, okay? But then you get several wins in a row. And obviously the winners, as with any strategy, the winners should always be bigger than the losses. So let's say that you end with a 50% win rate, but every win you've been winning $10 and every loss you've been losing $5. Well, 50%, you obviously end with money, okay? So yeah, just so you're aware, you're not going to win every trade. There's no sort of a magic recipe. But yeah, to trade this, you need time. That's the main thing for me. Like in an average day, as wrote, 10, a lot of trades can be taken. So, some of those last a few minutes, others up to an hour. What I've put in here is then when I would close manually. If I enter a scalp trade and 1 hour later the price has not moved, I will manually close out of that trade because it's not fit my criteria. I don't want to be looking at it any longer, so I would just close out of that trade. Well, for a win or a loss, I would just close it out. Like it's not met my criteria. Well, it's kind of the entry was met, but then it's like just gone sideways, and that's not what I'm looking for. It's really, really rare, by the way, that I have to do this because for it to hit targets, it doesn't take an overly long amount of time. So it is rare that I have to close it out manually. But obviously, just so you're aware, it could occasionally happen. And you don't want to just be holding this for days on end. But I really don't think it would happen very often at all. Okay. Okay, so the CSS, Chart Champion Scalping, adding complexity to the base strategy. As right here, I always do this, though it is not a requirement. If you just want to use that real basic method, I personally wouldn't recommend it, although you could try it. You could try it, okay? So this is the way that I do it. So it's always starting with the top down. Yes, this is a scalping strategy, but you do need to do your technical analysis starting with the monthly. You have to do your work before. You can't just, you could, if you do just the base, you could jump into any chart anytime and trade it. I don't do that, okay? So I would always do the work, look at the bigger picture before I start scalping, okay? Every single time, okay? So adding horizontal support and resistances, that's fairly simple, going through those monthly, weekly, daily levels, okay? Add an overall high time frame Elliott wave count, okay? I know that I haven't covered Elliott waves yet, so if you do not know how to do Elliott waves at this point, which is fine, then just look at the trend, okay? Elliott waves is basically just following the trend. Just say, is it making higher highs and higher lows? That's what I have covered here already. So, look at the trend. Is it trending upwards? Is it trending downwards? If you're in a weekly uptrend, then maybe you do not want to be taking shorts, okay? I personally would take longs and shorts, but, you could say, I'm only taking longs because we're in an uptrend, for example, okay? And this is the way that Elliott wave counts can help. Because if you are in a strong third wave uptrend, you're really going upwards strongly, then you might not want to take those shorts, okay? Because you are really playing against a strong uptrend. I occasionally then also would not take the shorts, by the way. If you're really in an impulsive third, just look at Bitcoin. Okay, if we refer to Bitcoin, of what, when you're in a this obviously isn't a real strong impulsive third, but you know, if you're in this sort of scenario, this sort of movement up here, like, do you want to be taking short? You know, it's just going back to look at the overall picture, and you know, you could trade with the trend if you so wish to. Okay, so add in the moving up and down percentages. This for me is really important, and this was obviously so the moving up and moving down percentage, that's a really important alert for me to have. Okay, because I prefer to do this with volatility. I find it so it just works a lot better with volatility. Okay, so if you're seeing Bitcoin move 0.5% on the day, I wouldn't say it's a good scalping environment. Okay, you want to see Bitcoin with like a 5% move, for example, where there's big volatility, 5-10%, you know, great numbers like that, real big volatility. That is when this is just amazing. Just like, that's why I loved it in 2018, because the average day was like a 10% move. It was just so good. Obviously you don't get that every single day, but when it comes, yeah, I would spend 12 hours just trading. So it was great. But yeah, so the moving up and moving down percentage is a must for me. The crossing, which just means price crossing a certain level, put that on your levels. Okay, and RSI alerts, which is obviously moving up or down. I've shown all of this though, setting up how to set up those alerts, all the alerts I use for scalping in the first ever champion stream. So the contenders, obviously, I'm aware you have not seen this probably, but yeah, for the champions here, that all how I set up all my alerts was obviously shown in that first ever stream. And if you are a contender, then just so you're aware, this is just moving up and moving down percentage on TradingView, just a standard alert. So you just come over to TradingView, add alert, you know, moving up and moving down percentage, change this to either 2 or 3%, so you can just go 3% in 3 bars once per bar, create, okay, moving up, moving down, add it to your time frames that you're looking to trade on. And yeah, that's just, it's as simple as that, really. Okay, so I'm not going to spend any time going through that. You maybe if I have some time at the end, if required, I'll go through that a bit more. But so yeah, moving down, okay, add in, oh, that was meant to say add in Fibonacci levels. Okay, so Fibonacci levels I also like to have on the chart. Okay, so you know, that's just adding in fibs from a whole range of environments. That would be the overall low to overall high, the move that you're actually on, low to high, or high to low, depending if you're going up and down. But I would always have a fib level in there as well. I think at the end of this, I will do this running through. Okay, so I'll show you how I set it all up at the end. Okay, so I will show you all this. Let me just see, out of interest, if we have questions. Yeah, okay, cool. I'm not going to take it, but we do have a few. So this is a counter trend trading strategy, scalping strategy, high risk. Okay, after I've explained how to do it today, I would say you are best to paper trade this before you just jump in and start using real money. I would, yeah, really say paper trade this, because yeah, you know, it's just a new concept, I guess. So this is not a mechanical strategy where I will take 100% of the setups that close outside of the Bollinger Bands. There is discretion to be had, and this is just, I've got a good example of this at the end, by the way, where yesterday it closed outside of the Bollinger Band. I posted in the Champions group, yeah, I'm not actually taking this one because I believe it's going to still drop down further, and with the same, it dropped down further. So it's like one of those, it's not like 100% every single time it closes outside you take the trade. There, you know, there is that, you know, that would be a mechanical trade. A mechanical trade is just seeing that rule set and just taking it every single time. Okay, this is where there is a little bit of discretion to be had. You know, we're not a robot. We can see what's going on and say whether, okay, yeah, this is one that I'm not going to take because maybe it closes outside, but you know, the signs are that there's going to be another move down, and you'll wait for it to move down a bit more, RSI to come a bit over extreme before you jump in. Okay, so it's just be aware, it's not a mechanical way you're going to be taking it every single time. Okay, so yeah, as mentioned, start with a top-down view, technical analysis. So I guess it would make sense to start, you know, off here, you know, for example, drawing your daily levels, okay, drawing your daily, drawing your monthly, drawing your weekly levels. So add in your horizontal levels, okay. This is a really big important level, okay, to be aware of on the chart. So make sure you always start with your top-down view of the chart. Okay, and then that's when you can then add in your fib levels. Okay, that's when you can then start adding in like an overall Elliott wave count. Just so you have a bit more of a aware of what, you know, is the price more likely to be moving down or up in that day. Okay, if it's more likely to be moving down here, let's say, then where is a strong area of support? Okay, we could argue $70, for example. Okay. And that's just a really useful thing to have when you're scalping, to be aware of what's going on in the yeah, no, on a yeah, on a viewpoint. Okay, it's just good to be aware of on the bigger term time frame. Okay. So this is basically what we're looking for, and it's again, this is on the 3 minute time frame. Okay, so I like to do it on the 3 or 5 minute time frame. You can alternate, see what works best for you, but yeah, for me, if there's an extreme volatility, I'll use 5, and if there's like average volatility, then I'll use 3 minute. Just because if there's any, if you've got little, really small volatility, the moves are like so small, you'd be scalping for like 0.5% gains, and you can do it, but it's just, yeah, for me, I just don't. Okay, I just don't. I just would prefer to just not trade on that day if the volatility is so low. But yeah, basically, so this is like the core. Okay, so this is forgetting everything else. This is like the core basics. Okay, so it's, you see here where price is coming down, and then here you get a clean close. Okay, so this was literally took yesterday. This was yesterday on Litecoin. Okay, so this was yesterday's view. We were sat at $212, and yeah, oh no, this was this was a screenshot that I took yesterday. Here you can see where price was coming down, okay, and then it closes here outside of the Bollinger Band, okay. So when it closes outside of the Bollinger Band on the 3 minute chart, hopefully you'll have some volatility, then you will enter a long, okay. So you see it close, you enter a long, okay, a long limit position at the close of that candle. So let's say that it closed at $12.40. You will enter a limit at $12.40, okay, and then on the next candle you obviously would hope that it drops to $12, let's say 39 cents, and that obviously fills your long position. Okay, so you would look to long at the close of this candles. Again, if you have questions, save it to the end, because I've got a lot of slides to go through to explain this more. But basically, yeah, you enter a limit order at the close of the candle that closes outside of the Bollinger Band. Okay, that would be your entry signal. Okay, that would be entry, and then your target. Okay, and instead of the wick, I will do it on the candle close. Okay, so the candle close. Let's say the close of this candle was $112.40, and the wick went down to $112.35. Okay, so I'd enter the limit at the candle body close, not the wick. Okay, so you do have to use Japanese candlesticks for this strategy. And then the target is simply hitting the 8 exponential moving average, hitting the 12 exponential moving average, and hitting the 26 exponential moving average. You will take 33% of profit on the first, 33% of profit on the second, 33% of profit on the third, okay, equaling closing out the position when it hits 26. When it hits the 8 exponential moving average, you will move your stop loss, which is just going to be a standard stop loss, depending on the volatility, okay, because if you're aiming for like a 0.5% gain, then your stop loss is going to be a 0.2% stop loss, or this is what I do, okay. So if there's real little volatility, then that's something you can do. You use a 0.2% stop loss standard, 0.5% gains, okay. If you're trading with a bit more volatility, then I will increase it to a 1% stop loss, and then obviously your, whatever this is, to the 26 exponential moving average at the time. Let's just say for sake of arguments 2%, okay. So you're always keeping that at least 2 to 1 risk to reward, but it's obviously because the way that when it comes and closes here, you just have to give yourself like a standard stop loss, okay, unless you've got a level nearby, which then obviously aids you a lot. Okay, so for example, if we saw here, here's the 618 fib, then we can start to use that as a stop loss as well. But just standard trading, when you're in the middle of a range, for example, yeah, you would just literally place a standard 1% stop loss. So as you can see here, price would have come down, would have entered our limit order at the candle, okay, at a candle wick. Let's say we get filled on the next candle, price comes up to the 8. As price comes up to the 8 exponential moving average and hits your first take profit, that 1% stop loss that you had, you move to break even, okay, so you move it up straight away. That way, if you hit the 8 and you fall back down, you end with a little bit of profit, because you obviously hit take profit 1 and then got stopped out break even, so you ended with that little bit of profit taken. Okay, so as you can see here, we would have hit 8 exponential moving average, moved our stop loss up. On the following candle, we hit the 12. Great, we've hit 66% of profit taken, and then we get stopped out. But we get stopped out at break even, having taken 66% of profit. Brilliant, no? And then we come back down for a second trade here. Price closes outside of the Bollinger Band. We get filled on the next wick. Great, we're in another long position. Price comes up here, hits the, look, it takes a little bit of time. So you have to remember, this is taking, 15 minutes. And then price hits the 8 exponential moving average. Great. We take a bit of profit here, 33%, move stop loss up to break even. Then it gaps up, but hits the 26 exponential moving average. In the end, you come all the way up to the top of the Bollinger Band. But we're just aiming for the 26 here. So then you close out 26, and that would have been a whole profitable trade. So for example, here you get 2 take profits, then stopped out. Okay, still a winning trade. Here you take the whole of the trade with a win. Then you come up to the top of the Bollinger Band. This for me, I wouldn't have entered a short, because that for me is not closing outside of the Bollinger Band fully. I want to see like this candle close, this candle close. This is more of a wick above, so I wouldn't have shorted here. But you can see if you had shorted here, it would have obviously been a profitable trade, because you could have shorted here and actually took profits, but that wouldn't have been one that I would taken, because the close is not actually for me outside of the Bollinger Band here. But another long here, for example, where you close outside of the Bollinger Band, clearly closing outside, okay, give yourself the stop loss, and then you can see hitting the 26 exponential moving average. So that's the first slide. Okay, then you can just see here, oh, that is obviously moving down would help. Okay, so just more examples. I'm just going to go through these next few. I just a few more examples. So you can see here, price closing outside, enter a limit order at the candle close. Okay, target the 26. That would be where you could close out with your long trade. Okay, then you're looking for it to come back down and enter another long, or for example here coming up to the top of the Bollinger Band, and here you could enter into a short position, target the 26. Here you come back down, close outside again, enter a long, target the 26. Here you come out outside, close outside again for a short, target the 26. Okay, so the base strategy is literally just with EMAs and Bollinger Bands, where this is nice. Okay, but it does work better when you start to add in, as mentioned earlier, those other factors. But yeah, we'll get to those slides in a minute. But this is just the base strategy. Okay, moving down. Okay, so as you can see here, long outside of the Bollinger Band, stop loss here. So this is one, for example, where you wouldn't have actually got your long filled, because as you can see here, okay, you would have entered a long position here. Okay, but you can see that the next candle is just a straight upwards move. You wouldn't have got a long position filled, okay? Because let's say that candle closed here 11,350, and you enter your long position 11,350, and price just moves up straight away. Obviously, that doesn't fill your long, and that happens sometimes. Okay, it's just that just happens. So in that example, you obviously just do not get a position filled. No worries. Here though, this is one way obviously you would have got a position filled, because here you obviously can see your price closes outside, you enter your short here, and then obviously on the following candle you get your filled on your short, and as you can see, price very nicely actually came down to the 26, and in the end, took out the low here. And as you'll know from today, we're down in the 10Ks now, so or high 10Ks, but so yeah, that's obviously what you want to see to obviously get your positions filled. A little follow-up rejection on the next candle, that would be perfect. Okay, and then straight up rejection here. This would have been a problem for me. So this is one where a little bit of discretion is needed. If you see such a long lower wick, is that a good trade? I would say no, because your stop loss is below that wick, remember? So you'd have to, in this example, place your stop loss below the wick. With such a small gain, it's obviously not worth the trade. The risk to reward would be really, really bad. Although after a long wick taking out that low, you have a high probability of hitting that. It's still not worth it, really. In the grand scheme of things, it's not worth it, because although the high probability of hitting there, the gain is so small for the potential loss, it's just not a trade you would take. Okay. Close long here with long lower wick is not a trade. Yeah, I wrote it. I forgot I wrote this, but yeah, I did. So here, long lower wick is not a trade I would take, as the stop loss would be too big. Okay, because you have to remember your stop losses would be below that wick for the small gain. It just wouldn't be worth your time, because the loss is too big for the win. Okay, so this is now just enforcing what I've already explained here. So you can see here, price closes outside of the Bollinger Band on the 3-minute chart. Okay, so step number 1 is enter a limit order at the price of where the Bollinger Band closes, of where the candle closes, or a few cents above. What I mean by this is, let's say you get that wick down to $8, okay, but the candle closes at $10. Okay, if that candle closes at $10, I might enter my limit order. Let's say it started to move back up on the next candle, and I might enter that limit order at $10, 2 cents. Okay, so slightly above that candle close, just to try and get filled on the next order, just by like a cent or two, depending on what you're trading. Obviously, I would not always go just exactly on the candle close, but just a few cents above. If you're on BitMEX, like 0.5 of a cent. Okay, standard stop loss of 1%, 0.5%, or 0.2%, depending on the dollar range of the coin you are scalping. Okay, and you target the 8, 12, 26 exponential moving averages to close out the trade. Once one target has been hit, so the 8 exponential moving average, move stop loss up to entry. That way, if you hit the 8 and get rejected, you have a winning trade and you don't lose any money. Okay, things here that I would like to mention before I move on. I was going to mention something. I've totally forgot. I'm going to move on. Oh yeah, I think mine gone. I can't remember. So yeah. This was a funny one. So yeah, this was going through Litecoin, and as you can see, for example, so here. This is just showing you how many literally trades you can take in a day. So here, for example, you would be, and this is just on one coin, remember, like I'm doing this. Obviously, when I've got my 8 on the screen, so I'll be like trading 8 coins generally at a time. And you know, if you're taking like 10 trades here and then you've got 8 other coins going on that you're trading at the same time, that's how you take so many trades, because you're doing it across more than just one coin at a time. Obviously, that takes practice and experience. But you know, for example, here. Enter along when you close outside the Bollinger Bands. Here you hit the 26 exponential moving average winning trade. Okay, where's the next trade? Okay, here. So this is where. Oh, okay, so this is where there's a bit of discrepancy, and we'll have to go through the charts in a minute. Okay, because you can see here, you actually close outside of the Bollinger Band here. And then you move down. Don't know how much this is in terms of percentage. But if this was obviously more than 1%, then you would have got stopped out of the trade. But I would take 2 trades in a row, and sometimes even 3 trades. So let's say, for example, here, okay, so you take one losing trade where well, actually this isn't a losing trade because you hit. I think it's better I just go through a live chart at the end of this. And we'll ignore these losing trades in the middle of it, because obviously this could potentially be a losing trade, and then you get your winning trade. Okay, then the next closeout side is here. So this is obviously a winning trade, a winning short that you trade down to here. Let's say then you hit 2 take profits, you hit potentially a losing trade here. Coming down to your next trade, I think you'll get the idea, okay, of how how you can take so many trades where there's a lot of closes outside each time. Okay, yeah, I'd like to go through a live chart basically at the end and just go through this on an actual live chart. Where the strategy loses. So yeah, this is like where I just want to highlight some places where you can get losses. Okay, so obviously here, opening a long, I think this was a zoomed in view of this chart, or what I was just trying to explain. So for example, there where you close outside of the Bollinger Band, okay, you would have had to have fast reactions, but you do hit obviously in the coming candle the 8 and 12 exponential moving average. So if you were quick, you could have got out. But if not, then obviously you hit the 8 here. But let's just say pretend we don't hit anything and it's just a losing trade. So, you know, sometimes you're going to close outside of the Bollinger Band and you just continue moving down. Okay, it happens. Okay, so obviously opening along here, let's say, would have just stopped you out. Okay, taking the next trade though 3 minutes later would have presented a win. So then you got a loss followed by a win. Okay, here. If you had opened a long, you obviously never even hit take profit 1 and you get stopped out on the next candle. So yeah, just be aware. Yeah, you are going to get losses. Okay, 100%, you are 100% going to get losses, and that's just part of trading. Okay, you're never ever going to win every single trade. So yeah, this is another example of some losses where here, so you can see here, you close outside of the Bollinger Band, you got filled on your short on this candle. Like this is a perfect one, like where you just filled, you get filled, hit target. Okay, then you start to get some wicks. Okay, and then let's say here, you could have potentially taken 3 losses in a row. What happens? You take a long here, you get stopped out on this candle. Let's say you take a second trade where you enter your long here, you actually do hit take profit 2, but nevertheless, we'll just say it's a losing trade. Here, let's say you take another long, you actually hit no take profits, you get stopped out, and this then could be, say, your successful long. So let's just say, you know, sometimes you're going to go win 3 losses in a row, then a win. You know, you're not going to consistently just get win. I just really want to enforce and just make you all aware that it's not going to be a perfect strategy. Okay, but overall you should be ending with more money than you lose. Okay, so yeah, this is where I like to add in some complexity. Okay, so for example, long here, if you want to add complexity to this strategy, this is where you can look at the divergences on the RSI and the MACD. Okay, so this is a bit of a, you know, this is like what you could be looking for. So let's say you close outside of the Bollinger Band here, okay? So this would have been a winning trade, but what you could be looking for at the same time is from this low to this low, does the RSI form bullish divergences? Okay, so this is obviously 3-minute chart, so you want to see this moving down heavily, not really sideways. So this is where volatility comes into play. But let's say that you get a strong movement down, you close outside of the Bollinger Band. From the last low, have you made a low with bullish divergences? If so, well, that's adding more reason to take the long, okay, trading against the trend. If you've got, you know, if you can start adding in more confluence, okay, so if you can look at the last low to this low, have you closed down here with some bullish divergences on the RSI or potentially the MACD? Obviously, this isn't a great example photo, but this was just a random live one from yesterday. But yeah, have you seen bullish divergences on the RSI and the MACD? Obviously, it goes without saying, if you're trading this on Coinbase or a Binance altcoin, you obviously cannot short, so you'd only be able to look for longs. Yeah, that obviously is kind of obvious, I guess. But yeah, if you're trading this on an altcoin on Binance or you're just trading this on Coinbase, yeah, you just wouldn't be able to short. Okay, so then you're only looking for longs. Okay. So long taken. So this is where like my perfect sort of trade would be when you close outside of the Bollinger Band. So let's say you close outside of the Bollinger Band here on top of a monthly level. That would be like the most perfect confluence that I've like could imagine. Okay, like a monthly with closing outside of the Bollinger Band. That's one where I would enter that as a scalp, but let that run with a big size, because that for me is like, that's where I want to enter my biggest trades, because that for me is the biggest confluence. Like that's the really big confluence. If you get, let's say you get a monthly with a fib, well, that's obviously the best if you got a fib in there as well. But a monthly with the close outside. So this was a Walton trade example, and it was just really, really nice. This monthly level, obviously 2675. What did you get? You got a sharp move down, close outside of the Bollinger Bands, okay, and look how well it holds the monthly level. So this is where you could say long taken with confluence and monthly support equals increasing the position size. Okay, we're increasing the position size because there's more likelihood of it to actually hold here, because we're at a really strong support. And this is why mapping out these supports obviously is going to help you do this strategy, because instead of just randomly taking it and thinking, don't know what's going on here, you have that overall view and you know your important levels. Okay, so yeah, that's just something I would note. And then obviously I would add into the position size that I would normally trade with, because of the confluence that we have with the level. I would actually increase the position size than my just standards when I'm aware that we are bouncing off of that level. Okay, and that's where it helps to add in that complexity somewhat of like adding in those levels. Okay, yeah. So that moves me on to going back to my original post of there is an element of discretion that every single time. Okay, every single time when it closes outside of the Bollinger Band, does that mean a long? And the answer is no. So every single time it's closing outside. So when we go back to this, okay, this was obviously one that I done for an example. You know, every single time that it's closing outside here, would I be taking a long every single time? Like the answer is no. There is an element of discretion. Okay, and this I would say really does come with time, you know, actually using it, and I'm really getting a feel. It's a really, really hard to describe, but like this was just a pure example that I had yesterday. So this was yesterday, literally in the Champions group chat, where it closed outside of the Bollinger Band, where obviously price was sat here. I can hardly read 10,000, 11,000. I don't know. I can hardly read this, to be honest. But yesterday, whatever the price was at yesterday, about 11k. Okay, and we closed outside of the Bollinger Band twice in a row. Obviously, yeah, you can see here you hit the 8 exponential moving average. But as I wrote here, no bullish divergence yet or support reclaim. Personally, would not long just yet. So, you know, here is a long opportunity presented from this strategy, but I do not take it, as I believe it is going to go down and drop again in price, which it did. We're now sat down in the 10k, so it has dropped again in price. But this is where being selective with the trades, it comes with time and experience. You know, if you just had watched the slides, understood the strategy, and you start taking every single one, then you might find yourself taking trades that I would then say, you know, if you, let's say we were in a room together and we were going through and doing the trading together, you might say in that 10-minute session take 3 trades, whereas I might have taken 0 trades, and it's just like something that comes with really like getting a connection with a chart. I would say it might sound weird, but you can like get this connection with a chart and just like really feel whether you believe it's going to go down or up. And that might sound really weird, I don't know, but you do kind of like get it. Like it's really strange, but when you trade something a lot, you just really get a feel of whether this is going to actually continue or whether it's going to drop. And this was just a nice example that I just found yesterday while making this slideshow, because I just put this together yesterday. But yeah, this was like an example where, you know, most people are going to be looking to long this, and I just wanted to give an example of, you know, just because it closed here, I just felt it was going to drop again, and obviously it did drop again. So this is as predicted from the post. Price in fact did drop again, okay, and that's, you know, when it comes to being selective with the trades, does come with just time and experience, okay. So just a end recap here, and then I will go through a live example of this, and then I'll take questions at the same time, okay. So when BTC is breaking through a big resistance level and moving strongly, I would not trade a short strategy like this, okay. Likewise, if it's breaking through a massive support level, it is not wise to try and long, okay. When it breaks like this, I prefer to trade with the momentum. So a classic example, when Bitcoin broke through 6,300, okay, when Bitcoin broke through that, was I looking to short every single move up? Absolutely not. When you start smashing through a level like a massive resistance, as you can, you know, hopefully you can remember, it wasn't that long ago, but as Bitcoin was breaking through that really key level, are you looking to short each time? Absolutely not. You have to like use common sense. You know, if you're breaking through a massive resistance and you're dumping through a massive support, you don't want to be looking to counter that. Okay, you don't want to be doing that. You want to actually be trading with it, not against it in those sort of times and those really big levels. Okay, or if you do want to try and fade a resistance or a support break, wait for RSI to reach extreme levels with divergences. So that's extreme levels, e.g. going into the teens, going into single digits with some bullish or bearish divergences. I would definitely not try and fade a move until I saw at least that. So this strategy does require quick thinking and moving. To enter a limit order on the candle close, to set a stop loss once take profit one is hit, and then moving it up means full concentration is required. And that's like, you literally would have to block out everything, just focus only on this. If you start having a YouTube video on the side or X, Y, and Z, you're just not going to be able to do it. It literally requires, and this is why it's so draining. It is draining. I'll be honest with you. It is draining when you day trade for 8-12 hours a day. It is, but then the monetary gains are well, personally, I'd say the monetary gains are really worth it, but you do have to have that like compromise, that to make the money, you do have to put in a lot of time and a lot of effort. It's not easy money. You know, everybody thinks trading is easy money. It really isn't easy money, in the fact that it will mentally drain you. So it's not like easy money. You know, it requires a lot of hard work. Okay, and with this I will trade. Okay, so this is one that I do, and this is not one that I recommend for everybody. Okay, so I trade this with no hard stop loss set. So e.g. when I'm entering like a trade and I put in that 1% stop loss in, I don't actually place the stop loss. I'm really good with just having an alert just above, and if it hits it, I will just market sell the position or market buy the position, depending if it's a long or a short. I don't actually put in that stop loss. I will just close out early. Or when it hits that level. Okay, so when I see price moving to my validation area, I will market close out of the trade. This is because I will be sat closely watching the price, you know, and I'm not going to miss anything. Okay, one of my monitor is just sat looking at that trade, or one of 8 trades potentially, but I will be looking at it, and it's not one that I'm gonna I'll go to the bathroom a second and suddenly find myself 10% down. You know, so although I use a soft stop loss, you know, I'm managing it. Okay. But yeah, and I will also close out without a second's thought. You know, if it starts breaking through where I said, I won't think, I'll hold this a little bit longer. No, I'll just take the loss and just be done with it. But I do not actually enter that hard stop loss. 1, it saves me time, and 2, that's just the way that I've progressed with this. Like when I first started, I always entered the manual stop loss. Like 100% of the time, I would always enter the manual stop loss and move it up. Okay, but I'd say I've advanced now where I don't enter that manual stop loss each time. I just have the mental stop loss there. I know where I'm going to trade. I know where I'm going to close the trade in as it hits that I close out. That adds on a lot of risk, but that's just something I've come to do now. I just never enter hard stop losses. Okay, so ending with any questions, and then I'm going to go through this chart. So let me just see the questions first, and then we'll go through. Let's just go through Bitcoin together now. So we will go through Bitcoin here, and chart this together. Okay, and go through some examples. How much profit percentage have you done in average with this strategy with 50 to 100 trades? I hate like saying how much I make from this. So you just have to think in terms of how well you're going to do. I would say like be realistic. Let's say that's, it all depends on how much money you're putting in. I would say like instead of looking how much money you're going to make from it, look in win percentage. Win percentages are going to be arguably more important. So if I could end the day with a 50% win percentage, I'd be really happy. Like 50% win percentage on this is good. Okay, but on some days you're going to be walking away with like a 60-70% win percentage, and that's obviously on a good day. And on a bad day, maybe you're going away with like a 30% win percentage, and it was a losing day. You are gonna, not every day is gonna be 80% wins, but you are gonna get days of losses. But yeah, that's what I would focus on. Focus on win percentages, not on how much profit percentages, if that makes sense. You want to focus on just consistently winning. I hope that makes sense. But yeah, on average, I would say personally, I win probably about 50-60% of the trades that I do in an average day. Although I will be honest, I don't trade this strategy as much anymore just because of the time. But yeah, I average more or less about 60-65% win rate on an average day of this, which is really, really high. Like 65% is a really, really, really high win rate. But I'd be happy taking a 40% plus win rate, because that should end with money with a 40% win rate. Would you market buy if no positions filled? No, I wouldn't market buy. So that's one rule that I have. I just would not market buy. If my positions filled, I would just say never mind. You're looking with another 8 coins to trade. If you miss one trade, I would not care. I would never market buy. Generally, because I'm trading for such small gains. If I start market buying in there, it's just eating up on fees, and I'm getting even less gain to my target. So yeah, I would never market buy. Would you apply the same risk and position sizing rules to scalp trading? Really, really good question. And the answer is yes. I would still I would just really make sure that you are still abiding by risk management. So let's say, for example, that you're putting on 1% risk per trade. Well, go back and use that, if you're, so I can see a question from Dell. So like use 2% account size. Like the way that I would do it is, let's just say, for example, you're looking at a 1% loss each time. We'll work out what your position size should be with your account size. Obviously, I have no idea what your account size is, but with your account size, work out how much risk you want overall, and then work out how much your 1% loss would be on that. And that's how you should be working out your position size. Okay, so let's say, for an example, you have a 10 grand account. Okay, what you have to factor in is that you don't want to be entering into, say, a 7 grand trade per trade just because you have a 1% stop loss, because then you cannot trade everything else. If you want to be trading 8 coins, you can't just go 8 grand into one trade. Just because you have a small stop loss, okay? Because obviously, if you have to use it. You just have to think. So the way that I do it is I don't use the method of working out the account risk and working out the way that I've kind of taught. As I think I mentioned when I went through my risk management, I just use a standard position on each trade, okay? Which we'll just say is X amount of Bitcoin, okay? So each time it went down on every trade that I have set up, each one would just be 1 Bitcoin, okay? 1 Bitcoin, 1 Bitcoin, 1 Bitcoin, okay? Rather than trying to, this is the way I do it, okay? If you want to do a more of a precise risk management, then I would say use your 2% account risk and work out how much position size you should be entering with a 1% stop loss with a 2% account risk, okay? All you would have to be aware of that's going to give you a really big position size, because if you're only risking 1% and you're risking 2% of the accounts, then obviously your position sizes are going to be big, and if your position sizes are big, you cannot be scalp trading lots of coins. So that's why I prefer to do it, just having a set amount that I'll use on each trade, and then each trade will be one BTC, one BTC, one BTC, one BTC, you know, for each trade I take across 8 coins. So that's the way that I like to do it. But yeah, that's because I like to trade lots at the same time. But let's say if you're just starting out, then I would really say concentrate on one coin and not try and do like 8, 10 at a time, because you're probably going to make too many mistakes, I would imagine, trying to do that. 1 second. So how do you take 33% if you're trading on BitMEX? So it's quite easy. Let's say you enter your 10 grand position. When you hit take profit 1, you're taking 3,333, okay, or you know, just round it to 3,000, say, or you know, 3,300. So you know, you hit 8 exponential moving average, close out, you know, this is, say we're on a 10 grand trade, then you close out 3,300. Next level up 3,300, next level up 3,300, and just close it out like that. Okay. Would like to see how you trade 3-4 charts with entries on the strategy. I find on the lower time frames I would miss entries. You have to remember that not everything's coming through at the same time. So let's say, for example, that you're looking at it. Obviously, firstly you're going to want to have a big monitor, because otherwise it's going to be too small. So you are definitely going to need a big monitor for this, I would imagine. I would hate to do this on a small monitor, but and obviously you're going to need multiple monitors as well. But you have to think, okay, so this is an example, obviously, where everything's closing outside. But this doesn't always happen. But yeah, if you're in a scenario like this where everything is closing out at the same time, then obviously you're going to have to be very picky. That would be impossible to take all these trades at the same time. But that was yeah. This doesn't always happen where it always closes outside, especially when you're on these pairs. But you know, if it is closing outside all at the same time, well, yeah, you're just gonna have to be picky, I would say, because even I wouldn't be able to do that if everything started closing outside at the same time. We'll take the one which has the best overall setup. So arguably that would be Bitcoin, because Bitcoin's actually closing down on a monthly level. Here you've got no level in sight. What's this? Ethereum's just actually closed below the daily. Had a one bounce off the daily. Oh, so this was quite nice on Ethereum. Had a bounce off the daily, actually rose, and then it's obviously now literally dumped straight through. That was obviously a few hours ago now, but nevertheless, we're on the 1 hour chart, silly me. You know, it's just, yeah, that would make sense. We're on the 1 hour chart. Let's go down to the 3-minute chart. I thought that was like really, really strange that everything was closing outside, but I was looking at this on the 1 hour chart. I was going to say that is so weird how everything's never normally does that. And you know, when we go down to the 3-minute chart, you can see, yeah, that's much more like it. I was really confused then for a second. Did you mention? No, so I'm just using standard Japanese candlesticks, or on TradingView just calls them candles. What size monitor do you use? Yeah, 32 inch 4K. So 4K is like a must in my opinion, because what 4K does is it like makes everything really small. So a 32 inch 4K monitor, and obviously you're going to want at least 2, just makes it really easy to see. So does anybody have any questions about the strategy itself? If not, I will just go through and like work out, you know, show you exactly how you're looking at this. I'll just use Bitcoin for the example right now, okay, and then we can adjust. Okay, so looking at Bitcoin here, this is literally just looking at Bitcoin right now. Okay, so how many trades can we see we would have taken on this strategy so far? Okay, we can see here, okay, this would have been 1 here. What happens? We close outside of the Bollinger Band. Okay, close outside of the Bollinger Band. Obviously, we're entering our short position here. Stop loss. This is a really small percentage movements, by the way. These are really small percentage movements. So if we I don't take out the tool each time, by the way, but let's just say for the sake of the examples, we're taking out the tool each time. Okay. So our gain is for a 0.6% gain. Okay, so 0.6% gain. We could say, well, this is obviously not going to give you a 2-to-1 risk reward, but I would still take it anyway. Okay, and this is where it goes against like your own things that you teach. Like, it's not a 1-to-1, but the trend is down. So we have to remember the trend is down. So you're more likely to win on short positions. So that's just something to be aware of. Like here again. So like here you get a close outside as well. Yeah, and the trend is down. So even though your risk rewards are not amazing, it's still like a trade that where you're trending with the trend. Okay, so for example, yeah, this is actually, so today trading this would have worked pretty decent. Okay, let's just go through it. So you can see here, we close outside of the Bollinger Band. You come down to the 26 exponential moving average and you bounce. So you can see why I like to use the 12 here. Okay, so what do? Let me just talk you through this. Give me 5 minutes. Okay, so we close outside of the Bollinger Band, enter the short, give us our standard, say 0.5% stop loss, aim down for the 26 exponential moving average. As you can see here, we hit the 8, the 12, the 26, and it bounces. Okay, so that's one trade done. Okay, then we close outside here. Okay, so here is where you're going to lose the trade. Okay, if you're taking every single trade outside, because here you close outside, no take profit taken, and a straight move back down. Okay, and here, this is a really close trade to take. But nevertheless, let's just say we close outside here and it's another losing trade. There's no close, there's no close, there's no close. Next trade taken would be obviously this short here, and we have to remember we're in a downtrend, so the shorts are going to be better anyway. But here you obviously would have taken a short, and it just stop loss. Might have possibly closed out way too early here because obviously you dumped all the way down to the bottom of the Bollinger Band, but nevertheless closed out 26. Okay, here long taken, hit take profit 1 and then stopped. Okay, here is when we come down to the monthly, and this was a scalp that I took. And actually still in this one at the moment then, but close outside of the Bollinger Band. Okay, enter into a long, you've hit the 26 exponential moving average, and then you have not been presented with another trade over the last, what is this, about 45 minutes now. So yeah, there we go. So yeah, what I wanted to do was just do a top-down view, okay, of how we would actually set this out. Okay, so let me go on to let me just open up a whole new chart for you all a second. So this is what you would start your day like if you were wanting to do this on an average day. Yeah, let's just delete everything on this chart. Okay, so right, we have a plain chart. So how are you going to start off your let me just remove that. Okay, so how are you going to start off your average day? Okay, you're obviously going to come onto your chart and you're looking to spend the day scalping. You still need to work out, you still need to do your top-down view. So you're obviously going to work out your monthly levels first. Okay, put on your monthly levels here, or your most important ones. You've got your monthlies there done, just the high, the low. Obviously, you've got this one here as well. Okay, so we got our monthlies done. Then we'll come down to our weekly levels. Is there a close weekly level here? We can say yes, here's a nice weekly. So weekly, and yes, what we can say is we can remove that one and we can remove that one because this is the range we're in. We're only scalping, we don't need anything less than that. Coming down to the daily, is there a nice daily level to add in here for scalping? What we can say is these wicks are like really pretty nice actually. So this is a nice level because you got a lot of wicks coming onto it, so we can say this is actually a nice relevant level. And yeah, that's all we have on the higher term time frames. Then I would come to add in our fibs. Okay, so obviously adding in the fibs from low to high here, and then adding in a fib from low to high here. Okay, as you can see, there's a lot of confluence on those. I'd remove the first one. They're basically the same levels. And the other fib that I would add in, okay, is going to be from this low here to where the move started to move up. Is there a fib? There wouldn't be a fib coming into play right now, so we can remove that to help clear up the chart. And the other one you're going to want to have in is the overall fib from low to high. Is there a fib that would be coming into play today? Unlikely, because they're too wide. So that's where you can just add in and like clear up your charts. That would be also another fib that I'd want to be aware of, from the low of this to the high. 382 9,900, but that's a level I'm aware of anyway, 10k. So there's your levels marked out, important levels. Okay, and then you would obviously have done your fibs, you'd have done your horizontals. You could add an Elliott wave count in here as well. I will really quickly do what I'm looking at, which is obviously the W, X, and thinking we're moving down for a Y. E.g., shorts are going to be, should be more profitable than longs. If I believe we're moving down on the overall Elliott wave count, I'm more likely going to be looking for heavier shorts than I am for longs. Okay, another thing that I forgot to mention that I would also be aware of is the daily exponential moving averages. So what I would do here is add in the exponential moving averages. And then go on to the daily chart and say, I would have a note at the start of my day on my desk. Okay, the 55 exponential moving average on the daily was sat at 10,400. 10,400 I would just write down on my desk and be aware that's where the daily exponential moving average 55 is. Obviously the 200 is irrelevant for me at the moment. It's too far away. Wouldn't even need to bother writing that down. I would also write down the 4 hour, and as you can see, they would also have been irrelevant today because they're so far away. So when that's the case, you don't need to make any notes of those, and then you can go straight into everything. Okay, and then we could have started off the day, okay, with our daily levels, our fibs all written out. Okay, so this is like a nice example. Okay, so what you see here, obviously this is the 0.5 fib. Okay, so you could have entered into a bigger position size because you're on the 0.5 fib. Okay, traded at the same. You have to remember we are in the overall downtrend, so the longs are going to be riskier because we're downtrending, so every long is going to be riskier. But we have the 0.5 fib lining up here. As you can see, you'd have only hit take profit 1 and take profit 2, but the stop would have been moved up to break even. Okay, so that, although you would have taken a bigger position size because you're on the 0.5 fib, okay, would have been, although you only hit 2 take profits, you would have realized 66% profit and then got stopped. It would have been a winning trade. Okay, let's see what else we had down here. Okay, there's nothing else coming onto a major level. Okay, and that's just, okay, the next time you hit a major level, so this was the next time you hit a major level, this would have been the top of the 618. Okay, this was, yeah, the top of the 618. So here you could have entered into a bigger long position. Okay, so here you actually close out, but I think you would have got stopped out on this one. I'm pretty sure you'd have got stopped out. Yeah, you definitely would have actually got stopped out because that's already a 0.5%. Okay, you wouldn't have actually got stopped out, but you would have only took 1 take profit. Okay, so you'd have hit take profit 1, moved your stop up, and that would have just been a horrible trade to take. And this is where a bit of discretion would have come in. I would have traded this differently, so it's not like I'm only concentrating on this. This would have been if you were looking for a long against the trend, taking it off at a 618, but 100% it's just one of those you would definitely have got stopped out. That is a losing trade every day of the week if you're looking to long that. And to be honest, you wouldn't have gone, it's not like a bad trade to take because you did have the 618 in the monthly, but it's just one of those things. Price is downtrending and it's bearish, so you lost the level. Never mind, I guess. But yeah, that would have definitely been a losing trade, taking a trade off at a 618 there. And then obviously it's just a standard long here, winning trade. And now you're just bouncing around the daily. So let me see. Has anybody got any questions? You can't use this on the 15-minute. I would say that you could, but you're going to be taking like hardly any trades if you're using this on the 15-minute. Let's see, like looking at it on the 15-minute, I mean, your preferred trades are the shorts here. So you could have entered a short here, which obviously, all I would say is if you're on the 15-minute, I would look for one area to the next. Okay, so for example, I guess like all I would say if I just so you're aware, I do not trade this on the 15-minute. So this is not a strategy that I use on the 15-minute chart. It literally is only the 3 and the 5. But all I'm saying, trying to think for you, that if you're using this on the 15-minute chart, I would definitely be trading with the trend. Okay, so when you hit here, for example, although this is a funny one that you hit the 26, but I would prefer to be trading with the trend. If you're trading on such a 15 minutes, quite a big time frame, I'd prefer to be looking for that short there, for example, rather than the long here. Okay, even though looking here, close outside, losing trades, close outside, potentially a winning trade, close outside, winning trade, short. That's the first nice trade there, really, isn't it? That's the nicest short there. Obviously, straight down to the daily, really. And all I would say is probably if you were looking to trade this on the 15-minute, I wouldn't be targeting the 8, 12 and 26 exponential moving average, because I would look for a bigger target. So I think you'd have to adjust it slightly, but you could take like the base idea of it. But yeah, I've never used it on the 15-minute. But it could potentially work. You'd need to back test it, to be honest. What is the max volatility you would trade? For example, if you trade in a coin that made 30% on the day, I guess it's more profitable to get stopped out with only 1% stop. Yeah, that's really true. So if you saw, I mean, generally these, I only trade high volume coins, and it's really, 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 really rare that you would ever see those move 30% in a day. I don't even think I've ever seen, well, let's not say ever, but how often you're going to see a high market cap move of 30% is really, really rare, I think. But let's say we did see Bitcoin move 30% in a day, then yeah, definitely you'd have to increase the stops bigger than 1%. Because the gains are going to be really big as well. So yeah, if you do see it moving like 30% in a day, for example, then yeah, you would obviously have to have a bigger than a 1% stop loss, because even the moves down, the wicks are probably going to be like 3% wicks. So yeah, I mean, generally you're not going to see that much volatility. 30%, today's pretty decent of 6%, to be honest. But what's the factor that makes you choose between 3 or 5 minutes? So for example here, so this is actually pretty decent volatility, like 6% in the day is decent volatility. So that's when you can move it up to the 5 minute, because that actually is, moving back to BitMEX, that is actually what I would class a highly volatile day. Like 6% moves, 6 to 10%, anything higher than what I would say 5% is, I would class as high volatility. So that's, let's just say higher than 5% on Bitcoin, then use the 5 minute chart. So how do you determine what the take profit is when that 8, 12, 26 is also moving up or down? Do you preset where you think it will be? Okay, so let's say for example when it's like moving down like this, so let's say we took the long here, for example. Obviously, if you let's say, so this is the way that I will do it. So let's say that we move outside, okay, and we enter a long, and here you obviously, let's just say, we're placing our stop loss below the wick, okay, just for the sake of explaining. So obviously, if you are then entering 3 limit orders, so straight away I would enter 3 limit orders. So let's just say we're entering a $10,000 position, okay, so we buy 10,000 contracts on BitMEX, okay. Then what you would do is straight away go over to the take profit section on BitMEX and enter 3 or just enter 3 sell orders. So we buy 10,000 contracts, enter 3 sell orders, okay, or obviously a close on trigger of 3,333, 3,333, 3,333. Just place those 3 on the chart. Let's say we entered here at 10,130. Well, then we'll place 1 sell order, 10,200, 1 sell order, 10,800, 1 sell order, 10,300. And then as they move down, we will move the sell orders with them. Okay, so you want to get the 3 set on your chart, okay, and then move them down as they obviously move down with it. Okay, as you can see here, you obviously here, then you hit take profit 1. Great. If you have that static stop loss set, obviously I don't do this, but if you have a stop loss set, say below the wick, well then you would obviously move that stop loss up to break even, because what, you've hit your take profit 1, so then your stop loss comes up to break even. Okay, here you hit take profit 2, great, your stop loss still stays here, but you've taken 66% of profit now, and then you move along. And here, you obviously hit take profit 3 of the 26 exponential moving average, and that's where you are now. Okay, so as you can see here, if we had taken this trade, then it would have hit 1, hit 2, hit 3, and you can just see how like well it works as resistance. Like undeniably, that's pretty worked as resistance. You literally hit it to the tick. But like yeah, so obviously you have to move it down as they move down. So I hope that makes sense for you, Dale. I think I've seen you using similar EMA strategy for scalping, using only 55 and 200 EMAs on 15. Yeah, so that's what I would do. So on the 15-minute chart, so this is like, I personally wouldn't call it scalping, but what you do is on the 15-minute chart, you just look how nice this is. So this is one that I prefer to do now because I have less time. But you see here, we're in a downtrend, so what do we want to do? We want to short. You're more likely to win if you short. So you hit the 55 exponential moving average, short, okay? Hit the 55 exponential moving average, add to short, okay? And then you could just trail stop losses. But yeah, this isn't what I would call scalping, because this could last a long time, but it's like a same sort of theory, I guess. But yeah, that's obviously a 15-minute moving down with the MAs. Like, you can just see it's pretty nice. The last time you were all up here. Okay, and you can see up here the 200 EMA was acting as resistance, so you could have shorted all up here, added, and just wait for stop loss to be hit. Have you tried using this strategy on low sat coins such as Matic, One, or Seller? If yes, what was your evaluation of the strategy? So I'll be honest, I haven't traded this on Matic, One, or Seller. They're all pretty recent coins. I haven't traded with this in quite a few months, if I'm honest, just because I generally just do not have time to day trade like this anymore. So yeah, I have not traded it on Matic, One, or Seller. But we could go through on going through it now and see what it would have been like on Matic, One, and Seller today. So let's see. Everything, no volume. So would it be nice on Matic and Seller? I don't know. This is obviously Matic. I guess it looks like it would be fine. Yeah, I mean, it looks like it would work. I don't trade it. I've never traded those 3 coins on this, but on this strategy in particular, I've never done it on this, but it looks, yeah, like it would work okay. Obviously, you can't short it though, so that's a little bit of a problem. You'd only ever be looking for longs. So obviously, if you're looking for longs, so there's a close, nice run. Here's a close, run, and these are like pretty big moves, I imagine. 2.8%. So yeah, it looks like it would work fine, to be honest. But that's maybe one that we can do on a live stream together when I do live trading. We can test it out on this. I'll be more than happy to use my money and test it. But yeah, it looks like it would be fine. Why buy limit instead of market buy? Because the lower the frame, I think due to time frame, limit buy might not be met. So you'll be surprised. You do actually get quite a lot of fills. Okay. So for example here, for the example, if you entered your limit order here, okay, you would have got filled. Obviously, this is where you have to be quick. Like you would have been filled on this next candle, because as you can see, the next candle does move down below it. Okay, below that close. So you generally will get filled. Let's say on, I don't know, this is just like putting a number out of my head, but let's say you enter 100 trades a day. Maybe you miss, of those trades where you entered your limit order, maybe you miss say 15 trades, so you're missing maybe 15% of the limit orders that you place. But I would never be annoyed about missing that trade, because you've obviously got so many others to trade. But yeah, you will occasionally miss, but I would never enter the market order. As explained earlier, the reason you do limit is because it keeps the fees down. When you're scalping for like 0.5% gains, if you suddenly start paying fees with market buys, the gain is even smaller, because you're buying higher up the order book, and secondly, you're paying more fees. I just would never market buy, and if I missed the limit, I wouldn't care. Does BitMEX allow you to place a stop loss order at the same time as sell orders? If so, if you bought 10,000 contracts and put 10 sell orders on, can you also place a stop loss order at the same? Yes, you can. Yeah, you can definitely do that. So you just place 3 sell orders, and then you just place a stop loss order. I'll show you when I do the next live stream on Champions. It's really, really easy to do. But yeah, you can do take profit orders and stop loss at the same time on BitMEX. Just make sure you do close on the trigger, and oh god, I can't even remember the name for the stop loss. But yeah, you just make sure you tick that box, and it's fine. Would be great to watch a strategy in action on low sat coins for bigger gains. Yeah, I wouldn't necessarily say it's bigger gains on a low sat coin, because for example today Bitcoin's moved 6%, Matic has moved what? 2%. So the gains are actually, the percentage gains are bigger on Bitcoin than they are on Matic. So yeah, just because it's a low sat coin doesn't necessarily correlate to being bigger percentage gains. Yeah, but yeah, I think it would be fun to do it on Matic as well, and that'd be one that I'd be more than willing to. As said earlier, I'd yeah, use my own money to test out on stream as well. Wow, this coin has took off. Oh wow, look at Dusk. Sorry, I'm just looking at Dusk. This is one that obviously I was looking at earlier, and it closed above that daily. I was like, yeah, here we are on daily, and it's literally closed through that daily now and just took off. Absolutely. Wow. 20% since it closed through that. That is pretty crazy. Wow. Yeah, so if anybody else has any more questions about that, please let me know. If not, I will take it that you probably need time to think of questions, because I'm sure you probably have questions. It's just you might not know at the moment. So maybe I'll put some time for next week for any questions that you do think of during the week to come, because I would say like you want to practice with it, and maybe you'll find yourself then, once you started practicing with it, finding questions for me. So yeah, if you have any questions, let me know during the stream we have left here. If not, I'll move on to what I want to move on to: Bitcoin, Litecoin, and Ethereum. Yeah, I'll move on to that. Do a quick Elliott wave on Dusk. I don't even think Elliott wave would work on Dusk. It's not a yeah, I'm not even going to do an Elliott wave on that. So looking at Bitcoin, like so I'll just start off with Bitcoin, then I'll move on to Litecoin, then I'll do Ethereum in that order, okay? I see you use more than the Pro, as in having multiple chart setups. Yeah, I have like I don't even know what it's called, Legendary. I don't even know what it's called, but yeah, I have the whatever the highest one is. I don't know. Hi bro, what do you think about Litecoin? Yeah, I'll cover Litecoin in a second. So first I'll start with Bitcoin, okay? So my view on Bitcoin is bearish, okay? Even this rally up, I still believe was a really nice order chance to sell. So I think in the last stream, which would have been about 1 week ago, if you can remember from last stream, and I was saying that this correction, for this price action up here, if you can remember, I was saying didn't have the 5 legs down for the flat, okay? And I was saying I would be extremely surprised if we move up from here, because that was, for me, corrective price action. We had the 3 and the 3, and I was saying that I would be extremely surprised. I couldn't even think of an Elliott wave count which would see us moving upwards. And what do you know? This is where Elliott waves is nice, because that's exactly what happened. There was no way that we could move up, and as you can see, price has in fact moved down very, very bearishly since that video last week, which is nice. So yeah, that all still plays into my overall viewpoint that I still believe that we can come down and test this monthly. Why do I now believe that we can test this monthly? Okay, obviously there's support down here. We have to be looking. We are on a monthly support at the moment. We cannot forget that. We are on monthly support at the moment. So I would like to see a close below this to really convince me. Because at the moment we're bouncing from support. So this is not a time when you really want to be shorting. The time to short was obviously a little bit higher up. But yeah, you don't really want to be shorting right now because you're shorting at support. So just be aware of that. But my overall viewpoint, if you do get a nice bounce, would still be to look for shorts rather than a long position. Yeah, because you have to think, if we have put in 5 waves, okay, so if we've put in a wave 1, 2, 3, 4, 5, okay, and if we look at this with a little bit of time, so the whole of this, okay, whole of that move, is it likely, oops, that's just gone, okay, is it likely that from the whole 5 wave impulse, we end the correction in literally, what is this? So firstly, the 5 impulse moves up took 194 days. Do you think it's likely that the correction finished in 31 days? That is really, really, really unlikely. Okay, it is if you're thinking about time, really unlikely that you correct the whole of a 5 wave impulse up in 31 days. It's just really unlikely, and that's why I favor seeing this as a WXY, or even we get some form of WXYXZ and this extends sideways. Obviously this is me making this video now, could change next week, but that's just something that I'd be aware of, that I'd like to see the correction take longer than it ending here, and that's where seeing this drop down in price would fit into a little bit more sense in the terms of, at least if we start to see at least 0.5, okay, so if we add in like 0.5 here, at least then we could at least see half, okay, so that would make sense coming up to around October. Okay, so October for me would make sense. I think we haven't even come up to 382. Okay, so as you can see, that 382 would bring us to the 18th, the 8th of September, the 0.5, the 3rd of October, the 1, obviously the start of January, the 618, I don't think we'd go on that long, but that's obviously May. They don't think we'll go that long, absolutely not. But yeah, 382, 0.5, those are also ones that I'd have in mind for this potential Y coming down. Okay, and that would make at least a little bit more sense. I think this correction was way too quick. When thinking about it sensibly, if that was 5 waves up, to correct everything in 30 days after a 194-day move up just doesn't make sense. Just really doesn't make sense to me. So I do think it would make better. And it would be healthy. Just imagine if we do in fact end up getting a sideways movement here, this then is building a hell of a lot of support for when price breaks up. You then have all of this area of support built, because you have to remember that this was a real quick rise. It didn't build support. So when we move sideways here, it is building up support for if price then breaks above, you then have a hell of a lot of support built up, which is really, really good. If price just like continues up and up and up, well, when it drops fast. Okay, so what you want to see is when price goes up, you want to see it sidestep up like this, because when you sidestep up like that, you are building lots of support on the way up. When something goes like this, well, when the drop comes, which it will be violent. Okay, so you do want to see sidestepping up, not just a rapid move up. Like, that's a rapid move up and it's all retraced. And what's pretty funny saying that is that what was this? It was a rapid move up. So what did that rapid move up do? It created no support, so you get a rapid move back down. Yeah. So yeah, that's pretty nice actually. Rapid move up, rapid move down. That's exactly what you expect, and that's why you want to see a big sideways consolidation range and building some support there for a potential move back up if it comes, but yeah, overall I'm still remaining bearish on this. My invalidation now for looking bullish, for me to flip and look at this bullishly would be a close above 11,475, because then we will take down this downward sloping resistance. If this does in fact bounce from here, we would take out that downward sloping resistance and come back above that monthly and come back above all that resistance there. That's my invalidation of looking at this bearishly. Until then, until we can get back above here, which was literally 2 days ago, until we can get back above 11.4, yeah, I think it's more likely that we are going to get this correction down to, well, I'll take it one step at a time, but obviously targeting around the lows here of wave 4. Yeah, targeting anywhere between 9,000, 7,000. That requires you to be there at the time. I can't make this call so far in advance. You need to see how price is reacting at the time. But yeah, Bitcoin definitely bearish. Okay, to let you know that there is an extension that allows multiple pop-ups. Oh, right, cool. Yeah, I think that you can like click on. I was like looking at this the other day. I know that you can like click on this as well. Oh, I don't know how you do it now. Oh, I don't know. Anyway, I'm happy paying for it. I literally don't care. But Chelsea won Liverpool. Oh, Super Cup. Yeah. So moving on to Litecoin. I'll do Litecoin next, because Litecoin I think is really, really interesting. So let's look at Litecoin. Litecoin, USD, and also LTC, BTC. This is why I think Litecoin is so interesting. Litecoin is on major support right now. Okay, because if you look at this on the weekly, Litecoin is on its last weekly support on the BTC chart before it goes into the depths of pretty much price discovery. You have to remember this wick was coming very close to zero. So yeah, with that in mind, Litecoin is on a must-hold support on the BTC pair. If you lose this, then that is an ugly chart, because this could just go into price discovery, and who knows where it could end, because there's no horizontal support right there. So yeah, I would be very careful if we lose this weekly. Okay, that would be really bearish. Okay, I really believe it would be very bearish losing that weekly support. So that is a level I would say you must have marked out. So the BTC pair is definitely not looking good. The USD pair, obviously this was a bit of a joke, I guess, that I posted on Twitter the other day with that target. But nevertheless, one has to look at there. So there is support there under 618. So there is support here under 618. Okay, why is this really nice support? Because you do have the 618, you do have this last block, and you do obviously have here an area of consolidation, okay, which is one should also imagine would act as support. And what's also really nice about this, if we look at the amount of time that we would have seen for this to correct, you can also see you're coming down to around the 3.2. So this type of time is acceptable in my opinion for a correction of wave 2, because that would obviously then come into wave 1. That would then give us our wave 2, and then we can move up for a 3, 4, 5. So the USD pair is looking better. The BTC pair absolutely awful. The USD pair is looking good with a nice amount of support here, but all I fear is that Bitcoin could destroy it. Like if Bitcoin gets this move down, who knows yet, but let's say Bitcoin did move down 24%, is it likely that Litecoin holds this area? And obviously that would only be a 14%. So I personally would not want to see it close below $60. Okay, I really wouldn't want to see it close below $60. So that's the bullish scenario for Litecoin, that it holds $60, holds above $60, and that turns into a wave 2 and we get a really nice move up for wave 3. But Bitcoin could potentially destroy this, or if the Bitcoin pair loses that support and just gives up, then that also would be a very, very big red side. So I'd like to see this hover around and hold weekly, and Litecoin USD to slowly move down as Bitcoin moves down to around the $60, $60 region, where I'd look to build along, just to try and trade this as a potential wave 2, moving up for a 3rd, 4th and a 5th. Okay, and obviously if that is true, then obviously, as we all know, the extension for wave 2 is going to be a 1618. And that would obviously give us our targets of around $265 if that is to happen. Okay, so head and shoulders on the weekly LTC BTC. Let's see. What are you looking at it like? This. Not sure how you're looking at it. Maybe this. No, I wouldn't trade this as a head and shoulders. Definitely not. Like, yeah, I wouldn't trade that as a head and shoulders, to be honest. I don't really see a clear pattern of a head and shoulders here. And the way that you're down at support now, I wouldn't. I guess you'd have to be looking at it like, I don't even know how you'd work in a head and shoulders into this. Share a chart, because maybe I'm missing something obvious. But either way, I wouldn't trade a head and shoulders pattern, because even if you're looking at that as the target, it's like 0. So, yeah. I wouldn't trade a head and shoulders on the BTC chart here. Also on the daily LTC USD pair, there might be one there. So maybe if you got a bounce here, so I guess then you could see that if you start to bounce here like that, or if you're looking here like this. I don't know. They're really, really bearish views. Obviously, that would give you an almost a 50% move down, which would bring you to $4. Yeah, I don't know. I don't want to be that bearish at the moment of viewing at it of anything like that. I prefer to like wait for it to close below $60. If you start closing below $60, then yeah, I would lose interest in looking for longs and just look to short that, maybe all the way back down to where the move started. But yeah, at the time being, I am remaining with a more of a positive view of looking at this as a wave 2 when we move up, rather than looking at it anywhere coming down to at the start of the move. Okay, if the data comes and we do in fact do something like this, well then yeah, obviously I'd be only looking for shorts. But in the meantime, I'm going to be patient and try and get in on that 618 to $60. And let me do Ethereum now. So ETH, this is a chart that obviously has to be slightly adjusted. Looks like we got a 5th here because this is very corrective. Obviously broken out of this one. And now where are we retracing to? Okay, so you are on 618 at the moment. I have a nicer chart than this. It's because I don't trade this on ETH. USD on the BitMEX is so much nicer. Yeah, here we go. So looking at this, obviously we got the weekly at $174. Okay, so weekly $174. You are on the 618 golden pocket at the moment, 180. So 180 to 174. You do have support here. So it's not a level I'd be looking for longs, basically. So I wouldn't be looking for shorts at this support. I'd wait for it to look for a short. I'd either wait for it to look to a bounce and short into a bounce, or for it to actually break down here and retest the weekly, and then I'd obviously look for a short. So at the moment, it would be looking for longs off of the weekly, which is $174. Then if you actually lose $174 and you do that, you lose it, backtest it, and break down, I'd be looking for shorts all the way down to probably $100, $96. So yeah, there's gains to be had there on the bearish side if the weekly doesn't hold. But at the moment, it is, one would have to say it's at support. So definitely wouldn't be looking to short Ethereum. It's a bit late. But this has looked bearish for a long time. Ethereum has looked really, really, really bearish for a long time. It was quite an easy short. Like if you look at the BTC pair, it's just been so bad. It's just been awful. Yeah, it's just been so awful. This was an idea that I had, but I don't think that's actually probably going to play out. But yeah, I was saying that, you know, this is a really important level because look, it's like literally at the bottom. It's either going to bounce now and get like a nice bounce, or it's just going to die. But yeah, it's just looking really, really, really bad, and this has been looking bad for a long time now. It's just been dying, so there's no surprise that ETH is doing bad. Is your time frame for LTC to potentially reach $66 October as well? So I would say Litecoin might hit sooner. I would say you look at the BTC pair, because that's going to really determine how this USD chart plays out. Okay, if that BTC pair loses support, yeah, I wouldn't be interested in longing, because if we lose that, then the BTC pair is just hopeless. So I would be, my main factor would be looking at the BTC chart, even if you're trading USD, because if you hit $60 but Litecoin BTC is like falling down to here and lost all support, oh, that's going to be a mission to try and get back up. So I'd be aware of both of those charts. But yeah, I would like to see this come down to around $60 in around mid-September. That would be a really nice correction. So mid-September would be nice if that can hold off for like another month to come down to $60. That would be a really, really, really nice trade. As long as you manage to hold up around here for a month as well, which is kind of asking for maybe a bit too much. Is your making sure I don't miss any comments here. LTC BTC 1 hour. I see 5 waves up with a completed extended flat jumping off the 618. Looks not too bad in my opinion. I will take a look at that really quickly. So what do you say? LTC BTC 1 hour. I see 5 waves up. 1, 2, 3, 4, 5. Let me just see really quickly how I'd look at this. Yeah, nice. So look here, where the breakdown starts. So top of the breakdown to the bottom of the breakdown. Okay, so where the breakdown started is here, yeah, and you pull your fibs down to the bottom. Okay, what did you do? You've just come up and hit the 382 fib. So yeah, I would not be looking at this bullishly. Yeah, I just don't think this is very bullish. The way that you hit the 382 and have just got fully rejected, and also this was the 382 of a major SR, because look, this was the support that led to this really big move up. That's a big move up of 12%. So that was the low that led to that rise, and you've just totally got rejected by it, by a proper big SR flip right there on the 382. So that's obviously not bullish. So yeah, I'm not looking at that in a bullish count. I think that's a bearish rejection right there. September is the time when Binance kicks off USA. By end of year, other exchanges will too. Possibly that help push it down. Yeah, I guess we'll have to wait and see. I wouldn't like to speculate on what's going to happen with Binance USA, to be honest. Thank you, been taking notes. No worries, man. 1-1. Yeah, I was interested in the Super Cup. But yeah, priorities. So yeah, that's then cover Bitcoin, Ethereum, and Litecoin. I guess like the main focus is obviously going to be on Bitcoin, and does it hold this monthly right now? So it's trying. So an update on my long that I took, it's obviously not looking great. Still in the long. So where we started the stream to where we are now, I'm still in that long, but it is obviously now starting to look pretty bad. I'll keep it until invalidation. Like I will literally just hold that till stop loss. We'll see how it goes. yeah, I'll hold it till stop loss, but it's obviously not looking too nice. So does anybody else have any other questions about the scalping strategy, about Bitcoin, Litecoin, or Ethereum today? When trade with BB in 3 or 5 minute charts and you trade with the trend, wouldn't be better to not close your trade rather than to run, since you are trading with the trend? Okay, so like, really good question. So let's use it. Let's go try and find an example. So let's go through an example. So for example here, what the question is, I need to take this nightlight off a second. What the question is if you were looking at this for a short, okay, you've entered, let's say, your short position, stop loss, let's just say here you're using it above the 200 exponential moving average, okay, and you're aiming for the 26 EMA. Well, yeah, if you're trading with the trends, well, does it make sense to let this run with a trading stop loss or target the monthly, for example? Well, that is obviously yes. I guess here is a kind of an example where, yes, I guess it would have just made much more sense to target a monthly, but it's not always going to do this. So it's not always going to go, this is like obviously just the first example that I found here, but it's not always going to do this. And over the grand scheme of things, rather than saying to yourself, oh, if I had held on to this trade longer, I would have made more money, I think you'll find yourself saying, oh, I'm glad I just kept taking profits and locking in gains, because otherwise you might find yourself in the position where it starts doing something like this, where it comes down to here and then it reverses, and then what would have been a full winning trade ends up in a break-even trade. Or if you find yourself not taking profits, then you could just see this where it reverses like this, and then you'll be like, oh, why did I not take profits? So the way that I do it, I always take profits, but I mean, you can always try and make this your own sort of view, where this is your stop loss. So maybe you say to yourself, right, I'll move stop loss down to here, I'll move stop loss down to here, I'll move stop loss down to here, and maybe you get, well, maybe you haven't been stopped out yet because you've moved your stop loss down to here. So that would be the high I'd be looking at now, 250. So that would be I'd have the stop loss if I was moving it down. And if we get another leg down, well, you can just keep trading that stop loss. So that could potentially work for you, moving stop losses down. I'm not saying like the way that I do it is the only right way, but yeah, the way that I view it is I'd prefer to like lock in and just move on to another trade rather than just trading one thing. Like I said at the start, if something goes on for more than an hour, I'll close it out. And you have to remember, maybe if you're only trading one coin, well, you can do that. But when you're like trading 8-10 coins, I'd prefer to just be in and out rather than like holding on to like each of the positions, moving stop losses, X stuff. I just don't do it like that. But it might work for you. Fascinating strategy on the BB, actually. You should mention how much money Bollinger Man, how much John Bollinger made. It's really funny, actually. Probably last year I actually tweeted to him. I had a thread and John Bollinger actually commented on the thread. I'd done a YouTube video. I mentioned it in a YouTube video last year. It was really, really funny. And I'd done a post on Twitter, and John Bollinger, like the actual real John Bollinger, he commented on it. And then I replied to him saying, oh, John, you've actually made me a lot of money with your Bollinger bands. Thank you so much. He never replied, but it was quite cool that he actually even found my thread. I have no idea how he did. Like last year I had like 1,000 followers. Like, yeah, it was quite funny. But yeah, shout out to John Bollinger. Would you use 3 commas on this strategy or trade on the actual exchange? To be honest, I do it on the actual exchange. This is nice. I say this is nice. I'm in a long, but I overall, I prefer this to move down. So overall, I'm happy that this is moving down. I'd like to see this come all the way down now, to be honest. But yeah, and this is one where if you did have your stop loss move to here and this does in fact lose this support order, then that's also really nice because you could just keep trading that stop loss. But it's still holding at the moment, so I guess we'll have to see. But yeah, I guess if you're on Binance, you can do it on 3 commas because I think it's going to be easier for you on 3 commas on Binance. But on BitMEX, yeah, 100% just do it on BitMEX. Like, yeah, it's really easy on BitMEX. But yeah, you can do it on Binance itself. Like, you don't need to use 3 commas. Oh, I never did anyway. Did you cover EOS? No, I haven't covered EOS, and I don't really. I'll take a quick look at EOS, but I only look at it ever on the BTC pair. Let's see what's going on here. So you can see you had a really big fake out. So this morning it was trying to hold the daily, and obviously it's just lost it. And this is one which I took this trade and I lost the trade. So I took a long as we started holding. So we back tested it like this. We come up, we back tested, and I took a long here, and obviously I just got stopped out as we come back down. So in the end it was like a tiny loss, but nevertheless it was a loss. And this is like, we're trading, yeah, you're not going to win every single time, but yeah, that was looking nice this morning because we literally broke the daily, we come back tested it, and we took the high. Obviously yeah, you know, in the end we've just moved down, but that was looking like a really nice setup this morning, and I took the long, but yeah, I lost that long. As you can see, price just moved down, but in the end, as soon as we come that back through it and closed below, I closed out the long. So it was like a really small loss, but yeah, nevertheless a losing trade. But yeah, overall on the grand scheme of things on EOS, yeah, it's obviously just not looking amazing right now, and that's a big rejection. I would be very hesitant to take another trade on this. That's not the type of rejection you want to see. Coming back above the level on the daily, it's going to look really bad. So what do you see on the daily? You see a wick above resistance, like a real proper bull trap. So that was a bull trap, but you know, that's why you use a stop loss. So you've took the daily and you've just got a bearish engulfing. That is just like a really bearish candle right there. So not something you want to be jumping into anytime soon. And that's why you need to keep your losses small, I guess. Yeah, so I'm probably going to wrap it up now. I hope that you have all enjoyed tonight, and I would imagine you're probably going to have more questions, because I would say I was expecting more questions, to be honest. So yeah, all I would say is go out, go away and trade with it. You know, go out and trade with it, paper trade with it, even you know, if you want to just paper trade with it, okay? And like work out, if I'd entered here, would have I won or lost? If I had lost, what could have I done to improve? Or what could have I done, you know, could I ask Daniel a question here on what I could do better, etc. You know, practice with it and see how it works for you or doesn't work for you. You know, it's not for everybody, but yeah, I would say go out, practice with it, come back next week with some questions, and I'll cover all the questions there next week of what you might have. Is it worth considering a longer term alternative bearish count for BTC? Yeah, I will cover that for you now before I go. So this will be the last thing I do before I go. So obviously my bearish count is looking down, but really good point that you don't only want to have a bearish count. Okay, you want to have a little bullish count on here. I'm really struggling to get the bullish count, if I'm honest, because I was looking at this as a 1 2 3. Okay, the bullish count is really bullish. Okay, the bullish count would have to be that this was a 1 2 3 4 5, and then this is actually a 1 2 3 4 5 of the third. Okay, so like that, it's just a really bullish count. Okay, so you'd have to remove that X and just imagine that this is 1 2. So there's your wave 1 2, and because you've now retraced below wave 1, well, that's 1 2 of the third, and I just don't like counting it like that. But obviously, if this is the count, I would have to say until you really break 10,000, 9,080, well, we have to still imagine. Okay, so we can go on and say 3 up to 16k, because that would be my target, 16k if we start breaking up from here, 4 5 up to around 18k, because on the daily, you know, you have that daily level up here at around 12,000, and then on the overall daily you have that level up here at obviously 17,000. Yeah, so I think that would be the roadmap for me if this is a bullish count. Do I think this is a bullish count? No, but I'd be more than happy to admit that I'm wrong if price does in fact move up from here. But yeah, I am looking at this bearishly. I would be surprised if this is a 1 2 1 2 rather than a WXY. But yeah, there's both counts. One is WXY bearish, one is a 1 2 1 2. I think this is less likely, hence why I'm shorting. Like mainly I'm shorting, but you know, on the side, like little longs. But yeah, my main view is definitely looking at this bearishly. Best analysis in the crypto scene. Thank you so much. Really appreciate it. Thanks, Daniel, for explaining your strategy. No problem, man. Yeah, you have to remember, like, this is something that I would say. Going back to my point that I made here, you have to remember that I've been trading with this a long time. So have to remember that I've been doing this years, and this is like some of the scenarios that, like, where we've been going through, I would not be taking every single trade. So you do have to really remember that when you're practicing, don't just, I mean, it's really hard. I guess for practicing, yeah, take every single one and see which ones win, see which ones lose. But you do have to also remember that you're not just going to start doing this tomorrow and win every trade. That's why I say practice. And, you have to remember, I've been doing it years, and it might take you a little bit of time before it starts becoming really natural. It is really fast. It's really fast paced. You do have to be on the ball. If you get distracted, you're going to lose money. You have to really be on the ball. And remember, when that candle closes, you don't have long to enter your limit order. And when you've got this 8 on the screen at the same time, it is difficult, and it is like a real big, I'd say it's skillful. So it's kind of like, if you're really good at, I love video games, and I find this so like a video game. So like, I was really good at video games, by the way. I went to this is really geeky, but I went to LAN tournaments, and yeah, I was like a pretty good gaming player on Call of Duty, but I have really good reactions. I've always been really good at sports. I don't want to brag myself, but I've been pretty decent at sports, and I've got good reactions. I love that sort of fast paced movements, etc. So when I'm looking at this on the day, what I wanted to say is just that, yeah, you have to be on the ball, and you can't sort of sleep and do something. When you see something close outside, you have to go straight onto that chart, straight onto the exchange, enter the order, enter the stop loss, enter the take profit. Or obviously, if you're on Binance, you can't do that. But, you just have to be aware where the levels are on the ball. It's not easy. That's all I'd say. Thanks for all the awesome stuff. No worries. Muchas gracias a todos. Yeah. Yeah. It is quite difficult. It's not for everybody. Scalp trading is not for everybody. That's all I'd say. Scalp trading is kind of like a niche. I'd say it's so much more difficult than swing trading. Swing trading, you have all the time in the world to prepare this. I could have been 10 hours ago saying I want to buy this monthly, and as soon as it hit a monthly, I buy and do a nice trade. But with scalping, you don't have that luxury of thinking on what you're going to do 10 hours before. It's all in the time. You have no plan. It's all in the moment. And that's where if you're really emotional, if you are a really emotional trader, it's probably not for you, because you might find yourself just getting way too entering to, I don't know, that's the advantage of swing trading, that you have time to think about things. Is possible use information about liquidation, long or short, strain on BitMEX for starting and stopping the trade. If I see short liquidations, so I start long. If I see long liquidations, I start short. I actually know somebody that does that. So you can go over to I tested it. I'll be honest, I tested it and I really didn't like it. I can't remember the website now. I have Tensor charts. This is it. So you can see how many liquidations there are. And so when you see these liquidations, you long, and when you see when you see long liquidations, you usually looking for shorts. And I tested it, and I done a whole month of testing out his strategy, and I didn't find it successful overall. It was all right, but yeah, I found mine much more profitable. But yeah, I do know that strategy that you're on about, but to be honest, I made more money with mine. It's all right, but yeah, I didn't really like it, but you can do it. Do you use market depth ratio? No, not really. Do you worry about volume on the strategy? No, also not really. If I've got everything on, so though I do have this one where I will occasionally flip to having it all on the chart and try and look for volume. But to be honest, yeah, it's not something I take into too much consideration. And I am going to run end of stream right there. I'm going to take this, otherwise I'll probably be shouted at. So yeah, I hope you've all enjoyed tonight. Any more questions, then yeah, just throw them over in next week's stream or over on the Champions chat, I guess, and I'll yeah, happily take those questions. And yeah, I'll catch you in next week's stream. So yeah, thank you everybody, and yeah, cheers, and I will catch you all next week. Thank you so much, and yeah, keep your questions, and yeah, hope you've enjoyed. Thank you. Cheers. Good night. Bye.